right, welcome everybody. Sorry about the slight delay there. We're just waiting for one of our attendees, one of the panelists to join us, Phil from ScotPack. Now, we just got a little bit of a technical issue from him, but in the interest of keeping everybody going, we're going to kick this off, and hopefully Phil can join us at some stage, and we'll get through and ask some questions as we go through and get them engaged. But first of all, thanks everybody for coming along, logging in and joining us. As you can see, we've got a pretty auspicious and fantastic panel up here. So just going around the room, and I'm going to leave one person to last because we'll find out in a second why. Sally Carmichael, Area Sales Manager from RedZ Lending, so thanks for coming along. We've got Zarko Jovic, State Manager from MFAA, great to have him. Glenn Mitchell, Head of Commercial and Equipment Finance from VOW. As I said, Phil, when he joins us, we'll give him a big welcome. And then finally, and this hurts, we've got Danelle Brooks, Head of Third Party from Lend. And Danelle, poor Danelle, everybody feel a little bit sorry for Danelle as she's at 1770 on holiday in the sun, just waiting for this to finish so she can go and have her first glass of rosé. But no, it's fantastic to have everybody here, and thanks to Danelle for making the effort for coming for everyone. It's really good to hear. Apparently we've got Phil in speaker here, so Phil, welcome too. Phil Freeman is from ScotPack, BDM of New South Wales and ACT. So now we're going to go through a round of questions, and I'm going to talk to each participant. I wish I could ask each participant every question, because there is some really fantastic amount of knowledge in this room, and I think it's great that we get to share it. But in the interest of time, we might just have to sort of bounce around questions, and I'll try and share it as evenly as I can as we go through. The format we'll go through is we'll look at the COVID impact. So what's COVID done to lending and the SME environment? What's changed in people's businesses and where they're going, and then looking at opportunities going forward from here. All right, so let's kick it off. First question, I'm going to go to you, Sally, and Phil, if you're there, you can sort of pipe in afterwards. But my first question with Sally is how are you working with this COVID impact? How are you working with your SME borrowers, to manage the pandemic?
So thank you firstly for everybody coming on board today. As a lender, obviously being RedZ, the primarily services is straight at that self-employed sector. So we very quickly geared up our hardship department with experienced operators to make sure that we managed the expectation and the influx of calls from business owners that had just basically had the rug pulled from under their feet. We're fortunate enough to have recently launched a new CRM system, so that made process for that broker a lot easier. We invested our man hours to provide support and guidance to those who were stressed and confused within the current market, and we've obviously offered the appropriate help with hardship and payment arrangements for those that needed it. Where it's been appropriate, those arrangements have been set in place, and we've carried on contacting and going through the process with the clients as well. Many of the clients that we had discussions with maybe didn't actually need it, and they had a bit more comfort from the situation that we just had to be a little bit flexible to consider what we needed to for them. And less than half of the people who sought hardship with us actually felt that it was needed, and they took part of that. Another valuable support that we've provided to our customers is we've obviously been that business partner to all of our clients, and we've given access to a counselling service to all of our clients and brokers alike, which is a company called Acacia. So we've kind of given confidential sessions, which RedZ have covered all the cost, and we've found that the take up for that has been significant. So we're showing that we're trying to support all of our self-employed clients and trying to help them to see through this COVID time and make sure that any impact that has had happen, that we offer the support that's needed. We've also initiated a COVID impact statement, which has helped with assessing new applications, and it's improved our engagement as well with the customer and the accountants to ensure that we can obtain the comfort within the business and the performance and how we can move forward to help with this. So we've kind of put a few initiatives in place to help that client that has been impacted in these hard times.
That's great. It sounds like you've really got deep into the relationship type model there, and that the mental health side of things is so important at the moment, as we all know, with what's happening out there with everyone. Yeah. Phil, just touching on you, any ways there that you're sort of working with your borrowers during the pandemic? Maybe we don't have Phil still. Sorry about that, team. We might just move on to the next question there from that, and I'm going to go to you, Glenn, to kick off with, and Danelle. Funding gaps. There's been a lot in the media around funding gaps between what banks and alternative lenders are getting, SMEs not receiving the funding they need to grow. Are the funding gaps real? And if they are, what can be done to fix the issue, Glenn?
Yeah, look, Guy, I'm probably the opposite view. I'm looking compared with the GFC that happened 10 years ago, where basically the shutters were pulled down and brokers were sort of finding it very hard to get funding in the markets. Whereas this time around, I think industry bodies such as MFAA, FBAA, and the like have really stepped up to really educate the brokers, where new entrants like yourself who have come into the marketplace, people such as Red Z, there's a lot more funding around. I keep saying to our brokers, it's not doom and gloom. Okay, we've gone through a crisis, and if we go through a little bit of history, because I've been around a long time, as you'd know, you look, we faced the GFC 10 years ago. We had a Royal Commission which potentially could have done a lot of damage to our industry 12 months ago. We had an election that fell our way, not that I'm politically motivated one way or the other, but it did help us. And then we've faced COVID, which no one would have seen coming. So I think that actually all lending institutions with the support to brokers and certainly the self-employed people should be commended. And mortgage brokers are going to play sort of a massive part in supporting self-employed people when we come out of this. We're also going into best interest duty next year, just to sort of, so we're a very resilient industry to rebound, but mortgage brokers for support to particularly small businesses will be more critical than ever before.
Yeah, great. And it's true. It's really true. Thanks, Glenn. I appreciate your view. Danelle, have you got some thoughts around that, around the funding?
Yeah, look, and whilst I do agree with a lot of Glenn's sentiment, and I was, pretty much in a completely different industry, working in telco, but in the commercial space when the GFC happened. So for me, this has certainly been a first-time experience as far as the industry is concerned. For me, I think there are funding gaps, but I think they're closing. I think what we're really facing more is that there is a demand and a supply issue, Guy. So we've got clients who are scared to pull the trigger. So deals are put on the table and are scared to pull the trigger and take the deal. We've got rate sensitive clients as well because of, the marketing and the promotion obviously of mainstream and rates and where that sits. And we still have that huge education piece that we need to tackle with, Aussie SMEs and keep encouraging our brokers to understand their alternate commercial space and where that can fill the gap. But we've also seen a lot of typical unsecured lenders really start to, and I'm going to be the first one to use it this morning, pivot their business. So we've seen, a lot of new products being designed to try and fill some of those gaps where typical unsecured cash flow loans don't always work for the struggling businesses. You've got your businesses out there that have flourished and grown during COVID, and they're still the same client that they always were. But then for the other guys, it's really been these businesses that have started to offer different types of lending to support the clients.
Great. Yeah, look, I'm, our view, we're sort of seeing a bit of a shine to push towards rates with all the publicity that's out there. So, you've got to talk about the other areas, and the product innovation has got to be key. But look, fantastic to have two different views there, and that's exactly what a panel discussion is about, and seeing what different views and different areas of people can come to in the market. So thanks, Glenn and Danelle. Zaka, coming to you. Government support measures, which sort of pigtails on that question we just had. Is it big bank focus, or is it for all SME providers? You know, we look at the government guarantee scheme. There's a lot of noise around that sort of failing to hit at the market. So what has government done well? What can they improve? That side of things. You're right up, you know, you're right close to a lot of this stuff.
So as Glenn mentioned, the industry as a whole has gone through a process for the last 3 to 4 years. So it started back with the government initiated ASIC review of broker remuneration. So that's where it all started. And you'd never wish difficult times on anyone, but the reality is, if we as an industry and you and your business didn't go through the ASIC review of broker remuneration, followed by the Sedgwick report, followed by the Productivity Commission report, followed by the Royal Commission, and then followed by the APRA and ASIC-led recommendations based on all of those reports, we wouldn't have had the opportunity to educate government. So the fact that we've had the opportunity to build narrow and deep relationships with government has meant that they understand that lending isn't just about Westpac, NAB, ANZ, and the Commonwealth Bank of Australia. They realise that lending involves a broad spectrum of providers, both the majors and the challenger lenders. So the spread of the initiatives that you mentioned, Guy, are across a reasonable spread of lenders, which is a positive for brokers, because for many of those lenders, the broker is the distribution channel for those lenders. So something that has been bought out of 2020, again, you'd never wish the experience we've gone through and some of your clients have gone through. But two things we know for sure now in 2020 is this: brokers have never been more relevant to all Australians. Whether they use a broker or not, a finance broker has never been more relevant. And the second thing is the service and the offering provided by brokers has never been more timely in its delivery. Every business I've spoken to a person in the last 7 months has actively contacted their database and offered help. As Sally mentioned, from a RedZ point of view, the initiatives that RedZ went and proactively contacted their database. We didn't see that through other distribution channels. Other distribution channels went the other way. They closed down the contact points for their clients. They closed down call centers. They closed down branches. So the opportunity that finance brokers have to be timely and relevant has come to the fore in 2020, but it won't be around forever, because you might have even seen news headlines in just this week in the industry press about lenders hiring a small army of business bankers to go and get that market share back. The market share they've lost because finance brokers are now having more relevant conversations with their clients than they did 2, 3, 4 years ago, which is a fantastic thing. So in short, I think the government's done a good job relative to the rest of the world. It's like saying, is this the best meal you've ever had? Well, it all depends on the meal you had before. But in relative to other countries, I think we're in a good space. I think we're in a good space because people have choice and they have the opportunity to get advice from a trusted source, and that trusted source is finance brokers in 2020.
Right. Yeah, thanks, Zaka. So there's a window of opportunity here, and we've got to take advantage of it. And finance brokers are on this call. Use that window. Use the industry people you've got around you to help, and get in contact with your clients, like everybody's saying here. Use your database. It's really, really important. Just to check, Phil, we got you on the line yet?
Yeah, can you hear me, Guy?
Oh, there we go. Success. We can hear you. Can't see you, but that's okay. We'll pretend like we can.
Let me apologise to everybody on the panel and also people watching. I I had trouble getting on via the laptop. Our firewall was blocking it. I'm now sat in an office in my phone, but it's good to be with you. Your marketing department have been fantastic in rallying and getting this done in a short amount of time.
No problem. Thanks, Phil. It's great to have you back with us. All right, so let's throw a question at your way. Just to confirm, did your business, so coming from ScotPack, did your business, grabbing Danelle's word, pivot at all during the pandemic? And was there anything you did that was vastly different than before? So we'll go to you first, Phil, and then open to Sally if we've got a bit of time from here.
Look, there's a couple of things that we've done to try and, I suppose, assist our clients, assist streamlining the business. So we've gone quite heavily online with a portion of our offerings. So in our data finance, we have a cash connector product, which is very quick, literally can be done within a couple of hours, assess the client and look at what amount of money we can lend them. We increased some of our business boost loans quickly as well, and also the credit provided for those with our existing clients. And we went online very quickly during the start of the lockdown, and then we increased that from a $250,000 lend up to $1 million after the first couple of months, when it proved to be very effective and very rapid for our clients. Or there's actually new clients coming on board and old clients revisit.
Yeah, great. All right, it's good. Yeah, technology is king in this one, and we'll ask a question about that in a bit. But Sally, how about yourself? How about RedZ?
Yeah, so to be honest, we haven't changed dramatically, but we have put a few things in place and we've looked at some things a little bit differently. So, you know, we have put the impact statement in place, which I spoke about earlier, which helps us to really understand the individual client. And as a lender that specialises in lending to business owners, they often can be a little bit misunderstood. And so they've been what I would say is highly impacted by the mainstream lending restrictions. We used to be flexible and looking at the individual circumstances of each borrower at RedZ. So that's where I'm coming from, in that we haven't changed as a business. We've always done that. And we're quite widely recognised for our common sense approach and also our risk assessment, which is more on a case-by-case basis. So what we have done is we took the responsibility to look at specific industry, and where it was significantly impacted, we made sure that we spent more time in understanding this type of area, so that we could make our offering a lot more acceptable to these type of borrowers. It just means that we can make our focus on that type of industry quite quickly, quite personal, so more on a case-by-case basis. And we did find that even through the pandemic, there are certain industries that have actually got better. You know, they have grown through this period. So it's not a matter of looking at those clients who are in a specific type of industry and saying, well, you know, that industry, we've thrown a net blanket over it and we can't help you. In some instances, they've actually had a growth period. So to us, it's understanding the business. If we can understand what's going on and be proactive and take a really common sense approach to that type of client. So those are kind of a few changes that we've made within RedZ.
Yeah, nice. So there's some good themes coming out here along with what everybody's saying, but you know, a big part of it is relationships. You know, I'm hearing a lot from that from every single person on this panel, which is fantastic. Danelle and maybe Zarko as well, with this technology. Have you seen technology being used and incorporated to better support SMEs now, after this type of environments, the crisis has hit us? Let's go to you.
Yeah, look. Okay, cool. Thanks, Guy. What I have seen and what we're seeing is that, you know, our Aussie SMEs are a lot more educated now in relation to commercial lending. So we've seen a real shift in, and I guess it's technology, but in that client facing piece. So there's a lot more around what options you have, where you can find, you know, we've seen so many, you know, of our clients put up on their websites, really easy to use guides around, you know, what grants are available or what schemes are available. So even though they're not directly related to your own business, really trying to provide that information to guide the client in the right direction, which is obviously where our brokers become so important, as Zarko touched on before. So, you know, everyone has spent the last, you know, 6 or 7 months, certainly many people I know, and Glenn and Guy, I know you can both attest to this, that we have spent this time getting into technology. And that, you know, that technology is what's really important for SMEs, not just to make our brokers' lives easier, but also that education piece for our Australian SMEs is so important. And I think that's probably for me where I've seen the majority of the change. We're all working internally on you know, our own systems and bettering how we serve our brokers, which in turn better serves the client. So that's where a lot of the focus has been. Zarko, how about you?
Yeah, I would agree with those observations. And what we've seen is that people have changed the way they view the opportunity to change. So pre the requirement of living your life in a different way because of COVID-19, when a new idea or a new way of doing things was brought to the table for an SME or a finance broker or an aggregator or a lender, there was a viewpoint of, yeah, that might work, but we've always done it this way and we're happy to keep doing it this way. So you look at all the things that sat on the shelf until March 2020, when there was no other way but grab those things like DocuSign, like having the ease of actually getting the information that both the finance broker, the lender, and the aggregator needed to continue doing business. All those things that sat on the shelf that were put in the too hard basket are now rolled out and part of our everyday way. You look at your experience, I mentioned before in a little analogy about dining. You look at how many times now table service is not a problem for an organisation, that before you had to queue for 15 minutes to get a food order or a drink. Now, all of a sudden, table service is something that they have no problem in rolling out and maintaining. So it's the adaptability. And technology is just a vehicle by which a business survives and thrives. And what we've seen is the businesses that are coming out and are experiencing the current environment in the strongest way aren't necessarily the people who are the smartest. And they're not necessarily the people with the biggest range, but they are the ones who have understood what challenges people have and have adapted to that. So adaptability is a massive skill, because the way we've sometimes portrayed value as an individual business and as an industry as a whole has probably missed the mark. But what we know now for sure is that people care about three things. What can you do to solve their problems? What can you do to make them more money? What can you do to strengthen their business? And if you're delivering on one or more of those three things, you're going to have a partner for life. Guy talked about relationships. It's really about partnerships and relationships that help people to build and get through the challenges they're facing. And the reality is it's never been harder to land a deal. Danelle talked about before, the offer's there, the deal's there, just take it. But people are umming and ahhing, and you can understand that, because uncertainty promotes anxiety, anxiety promotes inaction. But when the actual deal is taken, the solutions are still there because the technology is now catching up with demand. It's a real supply and demand thing. We become innovative when we need to.
Yeah, very true, very true. And you know, the same applies to a lot of areas and a lot of industries around the globe that we're seeing. Okay, thanks guys. Okay, Glenn, coming to you. How are you going about understanding your client needs and what's important now to look at things like the loan applications? So looking at that now compared to pre-COVID, has it changed? Is it the same? How's that looking? And then maybe Phil, if we've got time, we'll jump into you if this is the same thing.
Interesting enough, Guy, and speaking to other aggregation businesses, year on year, business flows have been higher, which is quite surprising. But I think we've played a more important role by listening to the brokers to see what their needs are rather than us dictate the terms. And I think that's really important so that we get a bit of a handle of what they need to understand more often, whether it's product selection. Yeah, you can only do so many of these and they've got to run their own business as well. But I think you've got to remember, we're in a very, very low interest rate environment. When someone says you have to pay a little bit of higher on rate to get a quick turnaround on money, we're only still talking mid-5s to 6s. So we're not talking rates that, we were talking 10 or 15 years ago, which was quite high. So people are prepared to pay based on the amount of timing that they need for their business. Something that Sally touched on before, 70% of industries have come through this unscathed. It's 30% that need support now, and that's obviously the main industry has been hospitality and travel. So we concentrate on the areas that can be funded through that, by making sure we deliver information and detail, because otherwise they'll get brokers will get inundated with product selection and really lose track day to day. So I think it's a matter of trying to give the right information that's relevant to the areas that have been impacted the most. The others are obviously taking care of themselves. One thing I would say, the brokers shouldn't be waiting until now to look after their clients. They should have mined their database now to make sure that they're well prepared to come out of this. They should have been holding their hand all the way through. So I think looking after existing clients is just as critical as getting new clients on board.
Yeah, perfect. Phil, anything you've gone about different understanding the client's needs and their loan applications?
Look, I think Zarko touched upon it there. The uncertainty in the market does breed fear. Obviously, some businesses that are going well and should really be taking advantage of some increases in business. We see transport, security, companies supplying or performing cleaning products. Obviously, a huge boost to industries in the current market. I think there's been a degree of uncertainty to go out and actually take the step, because you don't know when this thing is going to change or pivot as it already has done. So we're just trying to make sure that clients and our brokers know that we've got capital, we're still here lending, and we're trying to support our existing clients who've been affected, and obviously be as flexible with those as we can. But we're looking to obviously secure further business and assist the market and the SME market in taking steps forward. I mean, we're still applying the same principles we were pre-COVID as we are now, which is common sense lending. As Donnell mentioned earlier, the business makes sense, and they can expand or they can increase or get better productivity, whether that be adding assets to the business or using trade to purchase stock, or debtor funding in our case to actually close those cash gaps in the business. We're here and we want to do business. So that's been a big thing for us, for both our brokers and the clients out in the market, just to let them know we're here to assist, and we try and process those applications as quickly as possible and give them the answers that they're looking for.
Great. Thanks, Phil. Thanks for that. All right, so let's start looking at what's going to happen from now, this point forward. Okay, so what's going to happen over the coming 12 months, 18 months as we really things start to rebound, because there's confidence starting to come back. There's green shoots showing everywhere. There's some areas, like as Glenn pointed out, it's a bit of a two-speed economy, and that 30% of industries that are still hurting, but the other 70 are starting to go. So there's two speeds there, and probably two speed geographically as well. So going to you first, Donnell, and maybe Glenn, I'll pop back to you as well. Lending products or characteristics of products that you think are going to be right for SMEs, looking at the SME business owners for the coming 12 months.
Guy, look, and that's something where, for us at Lend, we've really grown since January, where we're an unsecured, platform that, assists brokers to transact, their business. And now we cover 9 different product ranges. So I think, again, it comes back to education, because what we're seeing in the market now is this move to a multi-product type setup. So I've probably seen maybe a dozen in the last 8 weeks, where a client will leverage some debtor finance to then be able to support the affordability to get into, that new machinery that they need. Or they need a cash injection right now of 20 or 30 grand and, another 100 grand in 6 months' time. So a short-term cash flow loan coupled with, an overdraft or a line of credit product. So I'm actually starting to see a little bit of combination out there at the moment in the market. And again, that's where the education is really, really important. We need to make sure that, you know, our brokers and then in turn Aussie SMEs understand that it's not a one product approach at the moment. And I think it's a multifaceted approach that is really going to support those businesses to grow. As you said, there's plenty of green shoots out there. And one of the things that's been really interesting for me is the agri space. So with the release of the budget and the continuance of the asset finance, really, really interesting space. Lots of inquiries early already about being able to leverage, you know, this write-off. And agri equipment is so hard typically. So now all of a sudden there's lots of people out there who want to understand, want to learn about agri equipment, find out who the lenders are. So I think it's really important to broaden that knowledge, broaden that horizon, and go, there's plenty of product types out there. One size is not going to fit all right now. So listen to your client. You know, if you're a broker, you know, listen to them, pick up on those key things that, you know, all of our partners, you know, like you guys and also at ScotPack are all there trying to give advice and support to brokers on things to listen out for. But for me, I think we're going to see a bit of multi-product solutions for clients in the next 12 to 18 months.
Yeah, interesting. Yeah, really interesting. Good insight. Glenn, any thoughts from yourself?
Yeah, look, Danelle's really covered it off well there. There's no doubt there's a demand already for short-term funding, equipment finance, the stimulus package that the government are offering for tax write-off. So I think, you know, it plays well. It just depends on speed of the client. If the client's prepared to pay premium, well, they'll be able to get money through institutions, as we know, within 48 hours. So I think that's the great thing. As I said earlier, the GFC was a lot different to this, where there was funding restraints big time. Here, we've got plenty of availability, and it's just making sure that the funding lines that the aggregation groups are promoting to their brokers have had a good due diligence done. There's some players out there that, you know, we prefer not to deal with, if that makes sense in all due respect. But look, I think that the options that are available, as Danelle just covered off, plentiful, so that is good news at reasonable rate.
Yeah, good. Okay, thanks. So there's a lot of, you know, talk around here about education, thinking outside of the square, broaden where you're looking, and just trying to find the right solution for people, which might be more than just a single hit and miss. So okay, thanks guys. You touched on, you know, I know this is something you're passionate about, is around the brokers there, and it was really good to hear you talk about it before. Just what's the role? We'll sort of go, Darko, we'll focus on you on this one. What's the role of brokers in the recovery of the economy, and specifically, you know, as you know, this is where we're talking about SMEs, the engine room of the economy. What role brokers have got in this area?
So brokers have a great opportunity to be the option provider. So SMEs need options, and those options evolve over time. Danelle talked about gone are the days where an SME comes to a service provider, gets one line of product, goes away, and that's it, set and forget. It's a constantly evolving conversation that needs to happen. And who is better placed to provide timely and relevant options for SMEs than a finance broker? They're not going to get it if they go direct, because they're going to get a monoline offering. They're going to get one very restricted offering that doesn't have best in class in all the lines that the client needs. A finance broker can provide best in class across all lines, because they are able to provide those options where an institution direct can't. So it's a massive opportunity that brokers have to again be timely and relevant in the value they provide. And it's not about rate, as we've talked about through the course of our conversation today. It's about what is best for your business right now, and who is better to deliver that than a finance broker. This is a massive opportunity. We talk often about reporting statistics on mortgage market share, and the reason that the industry focuses on mortgage market share is the data is most reliable in that space. The mortgage market share currently sits at 57%. There's no reason that's not going to rise as soon as best interest duty comes in. I see a flow-on effect to non-residential lending as well. Currently, the best estimate is that finance brokers deliver about 23% of the market in this space. There's no reason that we can't hit 30, 40, even 50% as the demands of SMEs become more and more complex, and they demand more and more of a hybrid solution, as Danelle talked about. So the opportunity is there, but let's not be under the assumption that this is just a set and forget for the broker either. It's going to take hard work and it's going to take partnership. So for some broker businesses, it's going to mean actually partnering with a service provider that has more capability and capacity than they have currently to fulfill that need of the segment, because they won't be able to do it all themselves if they don't have that capability and capacity in-house. But the opportunity to have the conversation is where it all starts, and it's never been a better time to have those conversations than right now.
Awesome, fantastic. Good points in there. That market share, the ability to go up the ladder in the market share is something, you know, we should all be aiming for, but particularly the brokers. Let's own that market share, take it away from 23%, let's grow it. Okay, guys, the final question, and I'm just going to maybe ask a few around the room here, and we'll start with you, Sally. Opportunities you're seeing from an industry perspective, and where you see pockets of growth coming over the coming 12 months and longer. You know, we'll talk about green shoots. Where do you see some of these things popping up?
So I think the answer is quite simple, to be honest. Small to medium businesses are going to be the backbone for our economy, and you know, they employ millions of people, so there's going to be no COVID recovery without a thriving SME sector. The government will hopefully continue to provide support packages and incentives to get this back up and running again. So the industry will develop and grow, and the opportunities will become more clear from this growing sector. The lenders and brokers that are prepared to embrace this and use diversification in this segment, and then obviously to work with them to find practical and common sense solutions, with a little bit of innovation, I suppose, will be thrown in there. I think the brokers will then reap these rewards handsomely. So I think that it's definitely a great opportunity for brokers. There's a great segment out there that they can be gathering in, and just use diversification.
Right. Okay, we're really hitting on some good themes here for people to take away from this. Phil, just coming to you before we wrap up, opportunities you see in an industry perspective here for the next 12 months?
Yeah, I'd probably say, I mean, it's pretty clear. I think you're going to see, and we are seeing now, spikes in things such as providers of materials and cleaning operations. Obviously, in the current pandemic situation, it's a big focus. Security goes hand in hand, and transport. A lot of us are at home, working from home, getting goods delivered to home. So the couriers and the transport industry are areas that I'm concentrating on to provide funds to. A couple outside of the box, one that Donnell touched on, and I recently took some time to go out to regional New South Wales, is agri. There's a lot of farmers coming off bumper years after many years in drought in Australia. Last year's was very good for them, and it's alternative lenders like ourselves and the panelists here that'll find that money, because they've not had great incomes, they've not had great serviceability for a number of years due to struggling there. But there's some service sectors to those areas that I think will go very well in the next 12 months. And completely at the side, and some people might think I'm crazy, I think hospitality probably at the back end of the next 12 months will have a boom, because everybody's been locked away. We're not a nation, as you can obviously hear. I'm not originally from these shores, but I've been here nearly 20 years, and Aussies love to go out, and we will come back in force, and we will be down to the pubs, the restaurants, the bars, and we'll be spending our money as soon as we're allowed to, and we're back in a post-COVID norm.
Fantastic. Good answer. Thanks, Phil. All right, so guys, look, I'm going to just wrap up a bit here now, but there's some common themes that we're coming out throughout this presentation and panelists. Relationships, know your client, know your database. Information's king. There's a positive outlook. You know, there's people are positive about where we're going to go from here, so that's really good. The multi-product type of space. You know, don't just think about one solution for when we're looking about our clients. Think outside of the square. What else we can do? Educate yourself for that. Then broaden your horizons and seeing what's there. And then, you know, with those green shoots, 23%, you know, if it's only 23%, brokers can grow their market share and that ability to in this industry. So it's open, it's ripe for the picking. So yeah, so please, yeah, use the advice of these expert panelists, because they've been around, they know the industry. It's fantastic to hear their feedback. So on that note, just a little housekeeping. You can apply for CPD points, and that there is a code that we'll be sending out in an email post this, along with the video and the recording of today's webinar to all attendees. So thanks for coming, and apply for those there for the attendance. Panelists, thank you very much for your time. Great feedback, great input from all of you. Great persistence from Phil to get on board too. Yeah,
That was a scramble.
Good to have you. No, fantastic. Sorry I couldn't ask each and every one of you the same questions, but I think we sort of tried to share it around as we could, which was great. Danelle, try and not get sunburned, and let's go Tigers for the final, eh? All right, team.
Go the Tigers.
Really enjoyable. And thanks a lot. And please, everyone, have a good week ahead. And let's really positive and drive this next 12 months. Cheers.
Thanks, guys.
Cheers, everybody.
Thank you.
Thanks, guys.
Thank you.
Cheers. Bye.